Hello everyone, welcome to this video. In this video I'd like to talk to you about what has been going on with the UK economy over the past few years, and particularly so why once again recent news suggests that the UK economy has contracted the most in over 41 years this quarter. These are crazy things, sad things, and I think we need to understand the fundamentals of business and economics to be able to say what's going on over here. So without any further ado, let's jump into the topic. So first of all, what we need to understand here is that cities and even more so countries are in close competition with each other. If you think about the UK, it's particularly competitive in three areas: financial hubs, ports, and manufacturing. So if you think about ports, the UK economy, it has of course its Felixstowe ports, but and Netherlands has Rotterdam, Belgium has Antwerp, Germany has Hamburg, and France has Le Havre. And if you think about financial hubs, UK has London, but Netherlands has Amsterdam, Belgium has Brussels, Germany has Frankfurt, and France has Paris, and even behind that, we have Luxembourg in Luxembourg. So I mean, tight competition in a narrow area, very dense area. On top of this, manufacturing, again, all of these countries are also competitive in terms of manufacturing. And behind that we have even, for example, Eastern Europe, and we have, for example, even behind that, we have the Middle East, for example, Turkey, and so on. So many areas that are very competitive here, also in terms of manufacturing. And if you understand that cities and countries are in close competition with each other, then you understand that small changes in the competitiveness of your country, of your area, is very important for investors and businesses to make the call of whether to pull out of your country or invest more in it. So if you think about the UK is a nation that trades a lot, that manufactures a lot, and that engages a lot in financial transactions. And because of that, the UK had actually a lot of benefits from the EU. So if you want to trade a lot, but suddenly the EU is not anymore an limitless area, well, that's a problem. If you have a lot of important financial transactions, but suddenly again the EU area is not limitless anymore, not borderless anymore, well, again you have a big problem. And if you want to trade a lot, but one of your biggest trade partners, being EU, is again not freely accessible anymore, again you have a big problem. And this is actually one of the most important things here. The investor in the UK and businesses don't know what's going on when they will be able to access these important markets from a financial and from a trade point of view. So one of the biggest arguments in favor of the Brexit was that there would have been many agreements, trade agreements, that would substitute the EU, and that would make the UK even more competitive than it was. But it has been 2020 now already, and we still don't see any substantial trade agreements that could say, yes, it was good that the UK pulled out of the EU. And we can say that in the mid to long term, this might perhaps pan out in a positive manner. But, in the short term, it is very clear that this is not a positive development, because, businesses still don't know whether their investment is going to return to them, whether they should hire more people, whether they can have even, the normal stocks that they normally have, or that they need more because you can have a Brexit without any agreements or whatsoever. And this is a big problem. So investors are in a climate, in an environment where they're not really sure what's going to happen. And if you see all of these other options that investors and businesses have, they will wait up until a certain point, but after that they will make the call to pull out of the UK and switch their investments. And this might be a problem in the mid to long run, because one change can lead to another one, and this can lead to a chain reaction. And many businesses, Panasonic, Lloyd's, Bank of America, Barclays, Ford, Goldman Sachs, have already voiced their disconcern with the current situation, and have said that they would either pull out or are thinking about pulling out of the UK. And this can have not only short but also mid to long term consequences if these important trade agreements are not going to come in. And all of this uncertainty about what's going on in the UK, on top of course all of the political unrest as well, has led to a massive crash in the sterling in the UK pound. So normally speaking, such a crash can also benefit the country because suddenly your exports become cheaper, so you can export much more as a country and as a business. And so this export increase can offset the decrease in your currency. But what we are now seeing is that because of COVID-19, countries are closing their boundaries and businesses are purchasing much more from abroad and people are consuming much less. So suddenly we see the UK not being able to capitalize, leverage on the crash in the sterling. And we're talking about sizable crash here, tens of percentages, right? And so you can't capitalize on it. Your current exports have reduced in value and have decreased in amount. Business sentiment has decreased, investor sentiment has decreased, people don't know what's going on. And of course, there's not anything surprising that suddenly your economy is contracting because people don't do the investments, people don't buy, people don't export because people don't know what's going on, whether you are going to stay connected to one of your most important financial, manufacturing, and trade partners, yes or no. I hope this video was useful. If so, please don't forget to hit the like and the subscribe button. And I hope to see you also in one of the future videos. I wish you all the best in the world. Stay safe.